inclusion as a word is no more a political correctness. It's all about the progress, whether we are talking about inclusive society or we are talking about the financial inclusion. And the countries and the societies who really manage to really understand the concept of inclusion, it's not about enabling things digitally. The inclusion is a bigger than the digital empowerment or digital access. So here we will be trying to explore some aspect from Pakistan perspective. What does financial inclusion mean, and what kind of empowerment it brings to the country as well as to the society? So Francis, starting with you, I think it would be good if we can really understand what does the financial inclusion mean and how we really measure that we are doing it right.
So I'll give you a very concrete example to start with and then expand from there. The country of Rwanda, some of you will have heard of, there was a big genocide there in 1994. As a consequence of the genocide, the age structure of the country has been distorted, so the number of older people will increase by 300% over the next 20 years. But at the moment, total pension coverage for the country is 8%, and that's basically just those in the military pension scheme. So 92% of the country have no pension provision, and that's a huge policy problem because, one, it's a family crisis because it stops young people moving to the cities to be able to work, and there's no way that they can effectively send remittances back to their parents in the villages. Secondly, it's an obstacle to economic growth, and thirdly, it gets in the way of those old people who've been through tremendous challenges having a stake in society. So financial inclusion in a place like that is absolutely critical for the government, but it's also a huge entrepreneurial opportunity, which is going to take new approaches to risk, new approaches to investment. And of course, when all of those new provisions of payment systems and credit come into place, they're going to have to be adapted because people can't see because they lost their eyes in the genocide. Some people have no limbs, so they can't rely on a simple version of the phone. Right? So it's a transformative thing so that everybody in a society can take part. It's a global challenge insofar as 1.7 billion people are unbanked. 55% governments consider themselves to have a financial inclusion crisis in that regard. The OECD's got an initiative, the G20 has an initiative in this space. And here in Pakistan, the Pakistan National Bank defines it simply as getting access to formal financial services by individuals and firms to use a range of quality payments, savings, credits, insurance. It's increased the number of people who have those services by 30% in the last few years, but there is big regional variation inside Pakistan. But even if you brought them all into the banking system, even if government paid small businesses on time, which is a financial inclusion issue, then there'd still be challenges about regional spread, gender spread, exclusions by religion or ethnicity, exclusions by disability. So a successful financial inclusive strategy is one that raises up financial democracy in that sense for every citizen in your country, and as a result is a huge entrepreneurial opportunity because every citizen in your country deserves the best private, non-profit and government services.
Thank you, Francis. And that's bringing me to the second part. We are talking about people in a very democratic way, how we really bring them or we include them. But let's go to HBL and look at, from your side. HBL is a very large bank, right? And they have got an opportunity side where they can work with a low-risk customer or institutional customer. Why HBL should be focused on the inclusion side and getting a customers which may be a high risk, and the KYC is one of a challenge?
Assalamu alaikum, and thank you for the question. I think HBL would be very narrow-minded if it thinks it has already occupied the space it needs to occupy in Pakistan. Yes, we are dominant even today, and we are one of the biggest and the most, I would say, highest number of transactions, customer service provider there is in the country. But the numbers are in front of you. What was just explained to us. Only 30% of our country is within the financial system. 70% is not. So think of the space not occupied by us and many other institutions. So HBL is very clear. we need to get more engaged with the areas we are not occupied in. Today, and these numbers again reflect on the country and us, we are the largest provider of lending for agriculture at about 35% of the market share, but that's 50 billion rupees. And frankly, the need of the agriculture sector is far beyond 50 billion. But between us and other banks, the lending size book is that much. In SME, we do dominate even today. We are 17% of the market share. But at 17%, that's about 80 billion or 82 billion rupees of lending we have done from HBL. So imagine us and other organizations, if we were to truly be engaged in these sectors, how much bigger these books could be. So to me, there's a business opportunity, and that's why we need to think about it. Second, it's good for the country. We work in this country, we are part and parcel of this country. Our benefit is what is benefit of this country. If we don't do the right thing for this country, if we are not relevant to the country and the community we do business in, we will never prosper. So that's a strong incentive for us to think about what more to do. And on that, then what is it that you can do about this? We are very clear. Our organization and many other financial institutions have been city-centric. Our model of business, target market, risk management, sales management has been driven by what we understood about the city centers. But this population is not in the city centers. So in HBL, we recognized it. We started working on it 2 years ago. And July this year, we launched a separate subsidiary called Zarai Services Limited. If you've read about it, great. If you're not, I would urge you to go Google it. That institution is not going to be city-centric. It's going to be led by a person who is passionate about this space, who is not a traditional banker. His team is going to be people who are going to be agronomists, people who live and work in the rural areas of Pakistan, who are able to understand how to work in every tahsil and every chak. That's where these people are. That's where the customers are. We have to go there. These are people who are not going to be retail bankers. Nothing about retail bankers. Retail bankers are great people. But most of them will think about a salary program-based lending. Monthly salary aayegi, and we'll lend to the person. A farmer doesn't have a monthly salary. So you need to ensure in your institution and our institution, we all understand how to be more focused in this space by having an organizational push behind it and a clarity that this market is different. It's not about extending today's products and services. It's understanding the difference between a conference in a city and a dera in an urban area versus a rural area. In a dera, it's a very different marketplace. A farmer's marketplace operates totally differently. And how you become part of that ecosystem to sell financial services also to them. Therefore, to us, we are very clear, we are very good at it, we are already very large in it, but we are nowhere near the potential of this market. And to achieve that potential, we have set up the Zarai Foundation, which along with the rest of the bank is going to do much more for agriculture and SME. Which I think is the biggest segment for financial inclusion. Now you mentioned gender. Absolutely. So we have a program called HBL NISA. We have been able to generate 1 million accounts for women and women entrepreneurs specifically. And lastly, it's not just about programs for financial products. Jahan Ara is somewhere in the room. I saw her earlier. She's a partner of HBL. Her program and our program works together on mentoring young women entrepreneurs, especially those operating with digital companies, on mentoring them, introducing them to businesses, and supporting them as they grow in the business world. So you have to do all this. You have to build the talent piece, financial products, and most important, bring the right focus in your organization. Thank you.
Thank you, Sayyid sir. Thank you. Basit, that brings back to you as a JS Bank. You are in a similar space where traditionally it was more like an institutional lending or a very secured lending or lending against the security. So the new ecosystem which we are looking at from an inclusion perspective, that require a very different mindset, a very different risk appetite, and particularly picking up on the agriculture and moving away from the cities and going to the people which may not be able to provide all the documentation. So how JS Bank is looking at that financial inclusion and these risks and the compliance issue and making sure that the products are available which suits to them, but at the same time State Bank should not be penalizing you.
So I think we have to segment the market. I think when we're, as Sahir was saying, when you look at size comparisons, for example, you're talking about 50 billion agri lending, and I think we're at 12, and I think SMEs we're at 30. So if you look at the book size, HBL being the largest bank, and just us being a mid-sized bank, the book size, when I think about it, it's about, our size is about a third of theirs. But in terms of deposits, that's a 8x jump, right? So there's a lot of people in the middle that need to be doing what should be done. I think we are only as a bank about 15 years old, and given that there's 33% financial inclusion, we felt from day one the place for us, the niche for us was banking the unbanked or providing financial inclusion to segments of society that may have bank accounts but have not been lent to. So we divided the market between the S business, which is what we call cash flow lending, who don't have collateral. So there's a whole vertical in the bank that looks at the uncollateralized lending. Then there's the SME piece, the agri piece. Then there's the women entrepreneurship lending piece. And then separately is the youth. The youth is also distributed between Gen Z millennial, those living in cities, those that are very computer literate, those that will most likely go to university or have been to university. So that's a different target market we approach through our brand called Zindagi, which has about 4 million customers now. And then there's the piece within the youth that's rural. And then there's the piece which is the freelancer piece. So within that also, once you get into that space, you realize that each of those spaces are also differentiated. And then a lot of them graduate to startups. Now within startups, they're looking for two things. Initially, they're looking for open banking. So they're looking to not build rails, but to use banking as a service, which we provide. And some of them then graduate to, which is lending to equity investments, et cetera, that we do. Yesterday, for example, I was in Islamabad, and we ran a program, we call it the Z Prize. So this was 400 participants. We have 130 campus directors at universities across Pakistan. So about 450 students or groups of students participated for startups, and then we had the regionals, and then yesterday was the final, and a team from NED won the finals with an incubator. So these are college students who've built an incubator based in Pakistan, and we are now funding them. So within each of those spaces, there are many verticals. And like Sahir said, the way we have thought about banking is that it's the retail banker or the commercial banker or the corporate banker. For them to then differentiate each space and their requirements gets very difficult. And then there's always the low-hanging fruit that you can lend to government or the top 50 corporates or top 100 corporates in Pakistan. Once you separate groups of people that have no option but to lend to that individual vertical, only then you will see light at the end of the tunnel. So I think that's very important, and that's how we look at it. Of course, it costs a lot more because you build separate teams, and the environment is volatile, and sometimes government policy is volatile. But nonetheless, that is the future, and that's what we have to aim for.
Thank you, Basir. And it's bring me to both of you, Sahir and Basir, you have highlighted the 30%, and that's still an improvement from 21 to 30. That's a very big jump. Now it's bring me to Ghazanfar as well as to Jahanzeb. Microfinance bank, they were very specifically set up as a regulatory regime, how we can really create an adaptation for the micro lending or a micro deposit or really going for the inclusion. So Ghazanfar, starting from your side, what are the learning? Why we are still at 30%? Why we are not moving very, very fast. What's stopping people from getting into the system or a financial regimes in these sides?
Hello. Yeah. Good morning to everyone. This is an interesting question. If I look back at 2012 when we started Mobilink Bank, the state of financial inclusion, as mentioned to us by Governor State Bank, was 12%. So today we are at 30%. So we have done something to actually accelerate the pace of financial inclusion. However, the question remains that in a country where there are 240 plus million people, there are 128 million voters, registered voters, 30% means, as Sagir Sahab said, a major 70% population is still out of the system. Now, based on my own experience and our experience at Mobilink Bank and JazzCash, we have added about 6 million borrowers, digital borrowers to the system, which is equal to the number of borrowers added by traditional microfinance banks and commercial banks included. So this 6 to 8 million borrowers are new to the system only, and they were able to come online only through digital channels. This would have not been possible through brick and mortar. This would have not been possible through traditional methodology. So I believe that the trends clearly indicate that those institutions who are investing in technology, those institutions who are investing in online channels, they are going to gain the market share in the long run. And they will contribute in accelerating financial inclusion. Now, financial inclusion does not mean only just opening bank accounts. As we said, 30% people now have those accounts. But access to credit is still about 10%, which is an improvement, as I said, from 3% to 2.5%. But still 90% people cannot access bank credit. So that's a challenge that all of us have. And as again I said, I mean, the overall macroeconomic environment also needs to improve. Commercial banks have done exceedingly well in lending to the government and lending to the corporate sector. But when it comes to agriculture, when it comes to SMEs, only 5% of SMEs get financed by banks. 95% of SMEs still depend on family and friends and their own equity. So to my mind, one, it's, and if the policy rate is 22%, lending to retail markets, farmers, and everybody else becomes really challenging. So the overall macroeconomic environment, I think this is a question for Dr. Shamshad Saiba when she's here in the evening, that how can we, I'm not saying that banks should not be lending to the government, but then how do we incentivize them to lend to the 90% who still do not have access to the credit? So that's a big question that probably needs to be debated more frequently and more at a policy level. The second thing is, as I said, that digital channels are coming up fast. Again, it's a question of now scaling up. We have established that, yes, it works, and it's now possible to open an account within a minute. And it's also possible to borrow with the click of a button. But now lending is a capital intensive business. And of course, there is a huge risk involved when we go and lend on an unsecured basis. So again, the question is, are we really enabling players who are in the market already? Are we supporting them enough with the macroeconomic policies that they can really go and lend to these retail, micro, and SME markets?
And thank you, Ghazanfar. And I'll come to Jahanzeb for the similar question, but I'll add, you are an international organization and you are working in many other countries. So how you compare the financial inclusion drivers in Pakistan, based on you are interacting with them, versus other countries? So what the magic we are missing where the people are not coming, and despite all the technology and access available, they are not converting themselves, let's say 128 million voters, why they are not on the within the financial system right now?
So, one of the key things that we've spoken in other sessions also is that it's extremely critical for us to get women who represent 50% of the population in Pakistan into the economic fold for the future of Pakistan. And according to recent surveys, there has been a recent uptick in women financial inclusion from under 10% to almost 13%. So we are seeing that uptick recently, and it's going to be critical for us to get that population included, which is very different in some of the other countries that we've seen where we are operating in Central Asian states, as an example. In order to do that, it's important that we as corporate leaders and organizations realize that we need to mirror how our society looks like. So we cannot be where our organizations only have less than 10% women representation and we expect women to walk into a branch network which is predominantly men. So for example, in Finca, over the last 2 years, we have increased the representation of women is operating in rural areas from under 10% to almost 30% of our workforce is represented by women, and this is in rural areas of Pakistan. So that means it is possible. And what we've seen as a result of that is an uptick in women feeling comfortable in rural areas to walk into a branch network and learn how to open an account. In addition to that, like as Anfar mentioned, it's a lot of feet on the ground which is required to bring the excluded population into the formal sector. And we pay the price of putting that feet on the ground in microfinance institution. That means the cost is high, right? Now, what we do is we not only provide them financial literacy, we also have to provide them digital literacy in order to enable them to digital channels to operate their accounts independently. Now, additionally, what we need to do, as we've seen in the last couple of years where floods and climate impacted us quite a bit, and the segments we serve the most got impacted the most with the climate issue, the floods, and then the hyperinflation. So in addition to the financial and digital literacy that we do for our clients, and we've trained over 10,000 women via just Finca in Pakistan in digital and financial literacy. Now we are embedding the climate literacy into our sessions also, because it's critical for them to know how to be savvy about how to deal with the next shock that is going to come, and it's going to be a question of time that's going to hit us. And if we can protect our farmers, our small and medium-sized entrepreneurs, by ensuring they understand what's the importance of insurance and embedding, and we providing embedded insurance into the products to safeguard them against the next shock, then we will be able to safeguard us as institutions against the next shock that is going to happen, and it's a question of time.
Thank you, Janzeb.
Can I just add something to
Yeah,
that?
please.
Since you asked about other countries, I've lived in Africa and I still work in Africa. I'm with a bank in Africa on the board. In East Africa, for sure, I think there's far more clarity that this is about doing business. M-Pesa is a business organization and they've been extremely successful, but they've been very helpful in financial inclusion because of the way they ran it as a business. I think we still get confused between this being a social cause versus a business opportunity. As I said, in HBL, we see it as a business opportunity, but that doesn't take away from the fact that it's going to help people, it's going to help financial inclusion and those who most need that help. So there's a social benefit from it. But I think we need to run it as businesses in our organizations, and that will put far more impetus and force behind it.
No, thank you, Zakir Sahib. It's a very, very valid concern, I think. A lot of time we confuse the business case with the social cause, so we have to really look at that side. For microfinance bank and the large bank, I'll leave you with the one question and I'll come back to you. So far in a rural Pakistan, the biggest saving mechanism is committees, the women who put together that money, and that's the biggest money and the flow of money or a transaction we say in terms of savings. We haven't seen any product coming out from a banking or a financial system so far really to capture that, to really bring that kind of saving in that financial system. So I'll leave you with that question and I'll come to Sarah. There are commercial banks sitting there, very, very large, very, very successful, and there's a microfinance bank sitting there. And your organization is still working on the same financial inclusion and empowering people to really get in the financial system. So what is the gap that you are filling in, which these commercial banks and the microfinance banks are unable to do so far?
Can you hear me?
Yeah.
Yes? Okay, perfect. A couple of years ago, together with my Singaporean business partner, we set up a company that has a couple of products for financial institutions that are directed at their customers, individual retail customers. And two of those products are relevant to our today's discussion. One of them is a content for financial literacy, financial education, that is not like your typical financial content, but it's prepared in a light, often funny way, and it can be distributed through social media channels like Instagram, like TikTok, so it changes the way we think about financial education. It can be also served through those channels and in that form. And the second product that we created is a micro investment product. And we started initially with Europe. Now we are focusing more on Singapore and Southeast Asia. And the product is white labeled and allows the customers of the bank or insurance company to start investing with small amounts of money, like, depends on the market, but let's say $15 a month. And the app is extremely simple to use, and it's a good product for first-time investors. Most of our users are young people who are investing for the first time. So these are the two products that are relevant for our discussion.
Thank you. Thank you, Sarah. And Michael, coming to you as well. So what gap you are trying to fill? So there's a financial literacy and the content delivery, which is definitely, Jahanzeb picked up on that. This is how much does it cost for people to really understand that. So which area you are picking up from a financial inclusion and empowerment perspective?
So I think for me, enabling choice is how you actually get to financial inclusion. I'm a firm believer in partnerships and platforms, and open platforms, that is. And there is a circular wheel that you have to get going in terms of getting that choice enrichment going. And so there is, of course, users that needs to have those services readily available for them. There are banks that actually has to enable and be willing to partner with them. There is a regulatory body that has to offer the right policies, the right national infrastructure. And then again, you've got the fintechs or all the embedded financial players that are then looking for how can I actually leverage financial services inside my ecosystem. I think my esteemed panelist here also mentioned that if you can embed financial services in a, I want to say, in an invisible way, you can actually empower these SaaS solutions or other solutions out there that are really trying to solve a particular problem in a very specific way. And I think where invisible banking also comes in is where you can actually make, similar to say, setting up a stock inventory or anything like that. Oh, yeah. Technology nowadays enables you to basically embed financial services at the point of need. So it becomes something that is another tool that any platform can leverage in terms of actually trying to solve the needs of their particular segment they're looking for. And because I'm from Denmark, where the Lego bricks was originally invented, I really like this unbundling. So the unbundling of banking is a very interesting phenomenon that's happening nowadays. And if you compare that to your kids playing with Lego, if you throw away the instruction manual, you won't find the same construction done by any kid again and again. So again, if you look at it from the financial ecosystem perspective, you will find new ways of trying to solve the particular needs that the banks will not be able to come up with, simply because they're not equipped with having the necessary specialized insights into the different verticals in the markets. So again, if you can enable the choice, if you can enable this kind of rebundling, and you can see how people that are really trying to solve a particular need, how they can use financial services to serve that segment, then you're enabling choice at the end of it.
Now, I think that's a very valid observation if I look at that from a Europe perspective as well in general. Debundling it and rebundling it in a different combinations, which is creating a better solution which we used to have. So, and there's a lot of stuff which, when we look at EU on that side, is enabled through the certain regulatory environment and the public policy side of it, where people have given a feedback and the regulator is supporting those kind of innovation and restructuring of the entire financial system. So, Francis, let's bring me back to you from a policy perspective. What's your view? What are the key drivers where the policy intervention can help to really expedite the adoption of financial inclusion or financial system at a grassroots level?
Well, on the one hand, it needs a change in financial regulation, and if your financial regulators are tooled up for consolidated banking, not an unbundled banking, you've got a big problem. But much more important than that, I think there are kind of micro things, and if you take the city versus rural area, in many European countries, that would be the tension between the main capital city and the regions. So what's the variety of legal forms available to entrepreneurs to be able to structure the risks? If there's only one form of legal entity available to you, does that change the way that you pool risk, the kinds of stakeholders you can bring on board, and so on and so forth? And in Rwanda, for example, your women's village savings groups are securitized by the involvement of the local religious leaders and the local mayor, which means that they can then have a product provided to them because there's a pooling of risk across a new form of social institution. So I think the regulators on the one hand have to be a different kind of regulator. I've heard them described to me in other contexts as the kind of banker that can sit with the women in the village and listen acutely, can wander into the tech village back at their bank in their t-shirt with all the funky slides and the games, and then put on a suit and face up to the major financial institution in town. So you need translators at that end and new forms of institution at the bottom.
Thanks. It's going back to like how we really look at the financial system right now and how it will come back or evolve in the future. Just coming back to the micro Jahazaib, Ghazanfar, Sarisa, Basisab committee. The one example we got from Rwanda, how the policymaker really mobilized that product. So where is the key challenge to mobilize those savings in a financial system? Ghazanfar, please.
I've seen a lot of people talk about committees as a savings product. It might be a savings product for the person who gets the committee, but actually it's, in my view, is a peer-to-peer kind of lending. When it comes to financial institutions, it's not a savings product. If we get in, I mean, there are members who contribute, and then one member takes away all the cash or pool, whatever it is. So therefore, committees do not work the manner in which a lot of people think that these are probably saving instruments. These are not, for financial institutions in particular. What works in rural areas is usually when you, it's seasonal. When a farmer is selling a crop, when they sell their other produce, I mean, which is dairy products or livestock. So that's the time when they get cash flows. So we have tried to have savings products for them that till such time they have some liquidity with them, they get market-based returns. Because they usually invest in, again, either livestock, gold, or something else which cushions them against hyperinflation. So those are the windows twice a year or thrice a year when there is some liquidity that financial institutions can actually target. But most of the time it's the other way around. They need credit for improving their productivity, they need inputs for farming, they need livestock to invest in, buy animals, and so on and so forth.
So
Thank you.
I'm
Thank
like
you,
a broken record. To me, this whole thing will start if they're part of the system. You can get to what the saving product is. I fully agree with my colleague here, talking about what their needs are, but for that to be understood and met, they have to be part of the system. So what are you doing to do digital onboarding more easily? What are you doing to make your customer journeys easier, simpler for them to manage transactions? In HPL, we have an app called Connect. We took a very brave decision. We have been in the business 75 years, and we are very protective of our brand, HBL. Now we have a sub-brand called Connect. It's not HBL. The reason we separated it was we were very clear. This is a product aimed at a different market with different needs and different requirements. That product in 2.5 years has acquired 4.5 million customers. We believe we are on a trajectory to 8 million customers. It's very much focused on the rural population. It's very much focused on the younger customers. And the products we have in there, for example, are more fit for their purpose. Very much in line with what was being said earlier by my colleague here on my right. You cannot buy a ticket on Emirates Airlines on that app, but you can buy a ticket on Pakistan Railways on that. And in that, you can pay for Pakistan Railways ticket while you're in the app. So we are making it easier and simpler and more fit for purpose. And I think that is my answer to whether it's the committee product or some other product, we'll figure it out. First, get them into the system.
Exactly.
Thank
So
you.
bringing their lifestyle into the system and bringing them there, and then they can use it. Yeah, Michael.
Just to the point, so I've been working on the banking side and fintech side throughout my career. And I think there's this notion when I was working in Danske Bank back in the Nordics, 10, 12 years ago, there was this notion of owning the customer interface. So it's coming back to the notion of saying a bank wants to own the entire food chain. And I think for enabling financial inclusion, you have to unbundle that belief. So as a bank, you should think about how do I own the interaction? And you've got embedded finance, you've got banking as a service coming in as some of those conduits for this. But it's really important that you really understand, okay, it's not about serving a new app. It's not about serving new customers in a new way. You actually have to train your skill sets in terms of partnering and finding the people that are bringing these solutions to the end consumer. And that's where you've got to find choice. You've got to kind of increase the financial inclusion.
And if I can add one more thing, and with due respect to all my fintech colleagues in the room, and I'm quite sure there are a lot of them, so don't take your darts out yet. In Pakistan, digital is important. It's definitely a tool, but a country where 30% of your economy is cash, you got to deal with cash also. You got to create the capability. So your capabilities have to be digital and non-digital. So in HBL, we handled 10 trillion rupees of cash and it's still growing. So to me, to serve our communities in the urban but also the rural areas, we will need to have capabilities to manage cash, handle cash on behalf of our customers if we want them to come into the ecosystem.
So I think I'll come to that one again.
Can
When
I
we are talking about, yeah, please.
I just want to add, I think this is the reality of Pakistan, as Chris have said. Cash, unfortunately, the circulation is growing. And again, anything that can solve this issue is digital channels. More and more people getting on board, doing transactions online, having digital accounts. That's the long-term answer to actually replacing cash. But it's not just digital channels, it's again, it goes to the policy level.
Yeah.
How do we incentivize or disincentivize use of cash? But the only alternative is that we need to bring people into the system and either incentivize them or force them or create an environment where cash transactions are discouraged.
If you look globally, I think where the cash was discouraged, there were 3 or 4 key elements. There's a financial literacy, which is happening right now, so people know what's available. Then the trust on that system, that was an important part. The taxation system, which basically support that area where the documentation come into place. But the 4th element, which we have seen, is the regulatory regime and implementation of those one, like the consumer protection and deposit protection. All those regulations were there and they were implemented in a very expedited way to create that trust environment. So if you look at the Pakistan environment and the cash, Jahazib, you want to make a comment there?
Before giving it to Jahazib, I just want to make one additional comment. I sometimes wonder whether policymakers, what are they up to? You impose tax on cash transactions in banks, but there's no tax on people dealing
Physical
with cash.
yeah.
And no other measures in place to actually discourage them. So if they come to banks, then they get taxed. So whether you are actually promoting cash transactions in the market or what do you want to do? I mean, this is something that we need to get an answer from policymakers.
Jahazib, quickly, we just have another 4-5 minutes, so I need to bring one question back to Basir and Sarah as well.
So I would agree, we need to be able to, one, embed into the needs of the customers who we are serving. And these are the vulnerable and the poor customers. So we cannot force a product onto them. You remember, these are the customers, for them, Maslow's hierarchy means the most. It's food, it's education, it's medical needs, right? And then, once they have the cash flow, right, then they have to save for emergencies, which ends up using for consumption versus productive use, right? So therefore, we have to look at the entire ecosystem of being able to provide to their needs, and that is where we have an opportunity of building on that ecosystem within the microfinance industry and the banking industry to figure out how we can embed education, healthcare, enable them to come into the system where it meets their needs. That's number one. On secondly, we do firmly believe that yes, digital channels are extremely critical, but we are at a stage for this segment where a tech touch strategy is required at this stage in order to get them onboarded onto the digital channels. But for the longer term of Pakistan, it's going to be critical that we reduce the cost of those transactions, and the policymakers are able to incentivize digital transaction. I'll give you an example which actually this hall will recognize, right? There was a recent policy around reducing the tax on items if you pay by credit card, right, at restaurants. And certainly everybody has adopted paying by credit card because they see a reduction of 10% in taxes on restaurants. And why cannot we do this for the folks who are the most vulnerable in the population? And that will show the seriousness of that, if we can do that at a policy level.
Now, very valid observation, and I think that's bring us to the kind of things where we are struggling more. Is like Ghazanfar picked up that the people bringing cash to bank will be penalized, but they are keeping at their home and doing a transaction, they will not. I think there's a bigger area as well when we are looking at the financial inclusion. We are looking more on a payment and the product side, but if you look at the e-commerce and if you look at the freelancers, if you look at the TikTok, the people who are doing that, so this financial inclusion, how they can really use that payment system has created a different kind of employability for them and access to the money on that side. One area where from a risk appetite perspective, and that's, I always have that issue with the banks and I have a similar issue with the government as well. Still the government tender, which normally the governments are supposed to really incentivize the certain adoption. The government tenders still require that kind of securities and the history where the startups are not eligible even to apply for those tender if we are looking at that side. So from a financial inclusion perspective, I think there's a lot of stuff where the governments have to look at the PEPRA rule, and that's the second thing. When we look at the risk appetite and the risk practices within the banks, they still want to go with a very known KYC and the cash flows or something which they can see. So taking a bet which is a very high risk, that's still out there. One area which was highlighted within the audience is having a common KYC platform and the credit rating side of it, the small initiatives which can really help everybody to use the common data.